Welcome, Darsh, to Wealth Matters podcast. How are you today?
Good, good. Thanks for having me, Apesh. How are you?
Good, thank you. Thank you for taking time out of your busy schedule. I know you are a busy man.
Yeah, we all are.
so, how are you in Atlanta right now?
Yep, I've been in Atlanta pretty much all my life.
Cool,
Um,
awesome.
so, yep.
And I love Atlanta market, and that was one of the reason we started chatting. So, how did you start with real estate investing?
Well, it was by accident. Back in 2008, there was a lot of auctions, a lot of talk about the real estate and what kind of deals you can have. And I wanted to check out an auction in person, so I signed up for an auction. There was a minimum bid of 33,000. So when I registered, I put the minimum bid. The house was worth about 200,000. Didn't think I was going to win it, but I just wanted to know the process. So I show up. I'm on site, and there's nobody there but me. I end up buying a house. I didn't know what I was doing. I had no
Wow,
idea. Kind of nervous about it. I had to raise some money. I didn't have $33,000 cash. Just
that's interesting.
So that was my first deal. I got into it, and yeah, that's how I got into buying the real estate. I still wanted to sell it, flip it, that particular property. I rehabbed it. I spent about another 17,000, so I was in it for about 50,000 total,
Okay.
and I rehabbed it. I put it on the market, and it just sat there and sat there and just sat there.
Oh,
So that was interesting. So after about 6 months of just waiting, I finally decided that this is not working. This was a mistake. Uh, that would have been end of my career in real estate, except I decided that I have this. I have to do something with it. So
right.
I decided to rent it, and
Ah,
and I had an agent that helped me with it. She put the sign up, and in literally one day, we had a tenant that was in the market,
that's good.
and that's how I became landlord. And the rest is history.
That is
Um,
interesting. So, what was the rent? Do you mind me asking?
yeah, it was about $850 for the
That's not
rent.
bad. That's
Yeah,
50,000 in
yeah,
and 850 rent. So you are about 1.5% rent to price ratio. That's good. That's a good start, even though I think you wanted to flip, but most probably that made you switch to buy and hold, or the rental side of the world.
exactly. That definitely got me started. I saw that there was a huge demand for rental, not any demand whatsoever for selling it. So on one hand, you're able to buy cheap properties, and on the other hand, you're able to rent properties very, very quickly.
I see.
So it just made sense.
Yeah, that was a good time for renting because a lot of people were getting, foreclosed and they were moving into rental places, right? They were trying to downsize. So that was a good time because you can buy the, properties for cheap and rent them out at, pretty substantial rent.
Right, right. And the other part that made this process so much um, better was that you were able to. It was you were able to finance these. So
Yeah,
you can go out, and it was hard to not that many banks were lending, but you had between private lending and if you looked hard enough, there was money available that you can turn around and reuse that same money and kind of grow that business. And that's basically what I did. So I started off with one and started growing it, pretty much recycling that money again and again.
that,
So
that that's a great point you brought up. Like lots of people keep saying, "Oh, I wanted to invest in '08 through 9, 10, but I either did not have money and banks were not ready to lend, But as you said, if you try hard enough, you'll find the money. There were private money lenders, there were hard money lenders. Of course, if you had credit worthy some banks would also lend at that time. So it was about working hard enough, as well as trying it out, when taking the chance, right?
Absolutely. It's all about, taking action, right? It's kind of going out on a limb and making it happen.
Absolutely. So it seems you started with single family, right? So how many then, in '08, and then how many more single family you acquired over the years?
Over the years, I've, acquired about 130 some odd doors. So that's a mix
Wow.
of single family and smaller multifamilies.
Okay.
But, you know, it's it's all about number of doors at some point.
Right.
I did some flips in between, so I bought some and I sold some. But most of what I buy, I hold for long term rentals.
That's also a great idea too, right? So flipping in between just to generate some cash, fast
Exactly.
cash. But long-term hold is where you can maximize your profit, as well as you don't have to pay taxes, right? So when you flip, you are paying like 40% in taxes, whereas long-term hold you can write off, depreciate the property, etc. So
Exactly.
you're saving a lot on the taxes too.
And plus, it's less work.
Yes.
At some point, you only got so much time in the day, so buy and hold. You're
Yeah.
getting the cash flow every month, and you keep building that cash flow. You're adding to the portfolio, and then if the property appreciates, the rents grow, and so it just that model just works for me. Just buy and hold.
I totally agree. And flipping is more like an active business, right? So as you said, less work, right? Because flip, you do one and you're not done, right? You got to keep continue
Right.
to do that, right? So you have to buy another property, you have to go through the entire cycle again, uh, to be able to make enough amount of money, and then end of the year make sure that you have enough to pay Uncle Sam.
Exactly. Exactly. I actually have a few other folks that started about the same time that I did, and they went a different path than I did. They did more flips along the way, but some of them exclusively just flips in the
Oh,
nicer areas.
nice.
And today, where I'm at, where they are at, and there's definitely, some um, what I- conversations between us that he should have done a little bit more of what I was doing
Right.
because the market has changed so much. There are not that many opportunities for flips anymore. So
Exactly.
he's
I was going
basically,
to say the same, that like,
yeah,
especially I live in San Francisco Bay Area, you can barely flip now. When you would most probably
yeah,
not make anything. Right? So
yeah,
market's
exactly.
shifting. So if you had diversified, or if they had diversified, they would have had at least some cash flow right now to get them through this cycle, right?
Right, exactly, exactly. So I've actually given up on the flips myself. I don't do any more flips. I did my last flip and I got out of it last year, and I was
Oh,
not
cool.
doing that anymore. Yeah.
Cool. So, when you started, you said that you rented it out, and if I remember correctly, now you are doing everything in house. So you have your own rehab crew, you have your own property management business as well. Is that correct?
Right. Correct. So I have in-house property management. When I started to grow, I was relying on third-party management, and I was just never happy with how things were handled. Either they were not efficient or they were not quick enough. If they were spread out all over the place. Handling other people's properties. So I always felt like I wasn't, able to do everything that I could for my properties. So I ended up taking over the management myself. In the early days, I used to, pretty much do everything myself as
Oh,
a property
wow.
manager and as a landlord. So,
That's a lot of work.
um, yeah, but rehab wise, I mean, of course, I started creating relationships with different vendors that I have still have those relationships. And then, Now we have the scale that we have property managers that are more hands-on than I am, but they work for me directly. So
Oh,
I don't have
cool.
a third-party management. I have systems in place. I have the infrastructure in-house, so that way I can control my property. I can manage them the way I want to manage them.
Right. Yeah. If you have someone working for you directly, you know exactly what you want, and and then you have the crew as well on the maintenance side. So you're
Yeah, I have maintenance staff that can do some rehabs. Now, when you need some big heavy duty stuff, like if you need to replace a roof or replace the
right.
HVAC unit, we have relationships in place that they just come in, and I trust their work, and they know I'm going to pay them. So it just their relationship just helps to become very efficient in getting rehabs done in a timely manner.
Yeah, and networking and relationships are the key, right? And that's how we met at one, real estate guys syndication event. We were networking, and
Right.
we were like, oh yeah, this makes sense if we stay connected, right? So I think it's pretty important in this business. It's such a small world.
Absolutely. Yeah. It's a relationship business all the way
Yes.
around.
Yep.
You have a relationship with your tenants, with your
Exactly.
vendors, with even even with your banks.
Yeah. Oh,
It's all a relationship business.
yeah. Bank is the most important after tenants, right?
Yeah. In some cases, yep.
Yeah. So now that I know that you do everything in house, what do you like about your work the most? Finding the deals, or rehabbing properties, or property management side of it?
It changes. I like pretty much all aspects of this business, minus, you know, we have some bad apples, minus the eviction part of it, which, other than that, I mean, everything, I enjoy it. I like making deals. That's the bottom line. And you can make deals when you find properties to buy, when you
Yep.
rehab, when you do the rehab or doing property management.
Yeah.
So you can be creative and make solutions out of anything. So I enjoy the whole experience of this business.
So I also, when we started chatting, you mentioned that you are, or you already moved away from single family into multifamily investing, um, and you have also started raising capital. So why move away from single family to multifamily?
It's about the scale. I was already, when you have so many single family, you already have multifamilies, right? Because you have
That's
so many of
true.
these
They're just all
single
over.
families, right? Except they're all over the place, and
Right.
so it's just not efficient
Yeah, it's not.
from the management side, from um, just overall operation wise and profitability wise as well.
Right.
So, when I started doing smaller multifamilies, that's when I realized that, okay, one quadruplex is better than having a single family. And then I started buying a 12 unit. I said, okay, well, the 12 unit is better than the
Right.
quadruplex. So then we started buying a lot, even a larger. So it just works, from the efficiency standpoint. And then when you get into those larger deals, your financing terms are so much better.
That is true.
So not only you have um, the management efficiency, you also have better terms on the financing, and in the long run, you make more money.
And you are not
Um,
tied to the 10 loans, Fannie Freddie requirement as well, right? So you can get as many commercial loans as you want or need.
yeah, I mean that was the case early on, but now you have portfolio lenders
That's true.
so that helps with that situation. But it's still their terms are still
Oh, yeah.
not nearly as competitive. Those
Right.
portfolio loans are still pretty
Yeah, they are
expensive.
even worse than, traditional financing. So I don't even do portfolio lending.
Yeah, I mean, I've done a lot of those over the years. I mean, there's definitely a need and place for that. It's just, from the scale point of view, I think the multifamily, you know, structure just works a lot better. Um, and you know, when you do those larger deals, of course, you run out of money too. So that's
That's true.
why, you know, you bring people together to raise money, and then you go out and do the larger deals.
Yeah, so you can
Um,
diversify, right? So instead of you buying
exactly,
one property, now you can buy 10, and every investor is able to diversify as well.
exactly. As a matter of fact, I have investors that started dabbling into single families, uh, rental properties themselves, and quickly find out that even if you hire a third party manager or third party management company, you're still pretty involved. You know,
Right.
you have
Oh,
to make
yes.
decisions about, you know, so it's not really, you know, as hands off as it looks like on
Yeah, it's
paper.
it's not as passive as they sell, right? All the turnkey providers.
Exactly.
Oh yeah, we have in-house PM, and I have been through the everything what you just said, right? When I started, I bought it from a turnkey provider. He said, "Oh, we manage the property, we do everything," but then still every month I had to check on things. Oh, this is done. Is this did the tenant pay the rent? Blah blah blah. There was always something going on, so it's not passive, that you still have to be involved. Right.
Exactly. Yeah, so that was the other thing. So these investors finally realized that okay, you know, it's better to go into syndication. You still own a piece of that property, but you don't have to worry about or deal with these you know, issues with the
Right.
property.
Right.
You know, you know, I have the experience and the knowledge, and they trust me with, you know, with what I'm doing. And as long as you're making return on your money, you know, everybody's happy.
Right.
And sometimes the returns, not sometimes, actually, in most cases, the actual returns with the syndication is better than what you can do with going out and buying a single family rental property that you're going to hire a third party management.
I agree. I
If
agree. Most of the time, yes, that's the case. Unless you keep that single family for a long time and it appreciates like crazy, right? But that's usually not the case. So,
Yeah, I mean that, you know, I mean I don't buy things, you know, we don't know what's going to happen. So, you know,
right.
if you buy strictly based on the future appreciation, you know, it's just too speculative.
Yeah,
You know, everything that I buy, it's making money pretty much from day one. Um, so, you know, it's just that structure that just works well.
yeah, cash flow is the key. And also, let's say
Absolutely.
as a passive investor, I could put 50 grand and buy one single family. Instead of that, I can, invest 50 grand in a syndication, and I'm allocated to 30, 40, 50 units. So it's diversified. Even if one of the units is not paying, I still get paid, right? So that's the
Exactly.
yeah.
Yeah, you know, if you have one property and it's vacant, that's 100%, you
That's it.
know, vacancy versus, you know, one property out of 100, you know, big
Yeah,
difference.
huge difference.
So, yep, yep.
So what's your sweet spot? Like what kind of deals do you buy?
So the kind of deals that I buy, you know, it's pretty much, you know, I'm in Atlanta or Metro Atlanta area.
Okay.
I know the area. I feel very comfortable with it. I have relationships and connections, you know, with vendors and agents. So, you know, my sweet spot is here in the Metro Atlanta area. The properties that I buy are between 3 to 7 million. I think it's a little too big for the small investors and not big enough for the bigger guys. So that seems to be a sweet spot for me,
Right.
where I can, you know, where I can have my management. Doesn't have to be on site management. Most of the time, it's not.
Right.
Um, and so I can still manage it properly without having an on-site manager. You know, you can get the small balance loans from Fannie or Freddie Mac with amazing terms for that,
Yes.
you know, for that little amount. So that, you know, seems to be my sweet spot. That gives me the competitive edge.
Okay, so That's great. I'm gonna throw you a curveball. I don't know if you prepared for it, but what has been your
Okay.
best deal so far?
You know, my first syndication deal was about a couple of years ago. It was a 34 unit. We still own it
Oh, okay.
for about 3.5 million, for about $3.5 million. In about a year and a half, um, through efficiency in management, that property is valued about $5 million.
Nice.
So we have, we have a great cash flowing property that's appreciating. We have 100% occupancy, and it stays 100% occupied. We haven't had one tenant move out
That's
in
great.
the time that we've owned it. So, no downtime, no vacancy cost, and I wish all my deals were like that. I keep searching for them, but I'm not finding
It's
it.
yeah, it's getting competitive now. It's very competitive. So, so
Yeah.
what's your worst deal? No, not talking about your first deal though. What has been your worst
No.
deal, or if there was any?
Um, Worst deal would be my last flip that I did, and that's when I knew I was done with the flip model.
Ah, okay.
It was in a historical area, and just having to go in front of the committees to get everything approved, just very inefficient. You waste a lot of time, and it's just that was. I didn't lose any money, but I didn't make any money. So all the
Ah,
time and effort that goes into it,
that's a lot.
it
Yeah.
was just all a waste.
Right.
So yeah, that was probably by my far the worst deal, and it was a sign that I needed to get out of that business. So it was good to get out.
So, how many multifamily deals have you done so far where you have raised capital?
Two so far.
Okay.
One 2 years ago, and one just fairly recently, about 4 months ago. We bought a deal here in town in Atlanta.
Got it.
That was again, a 33 unit apartment building um, that we just raised about $1.5 million. They have 16 investors in it, and that's the most recent one.
And what kind of returns your investors are getting in these deals?
So on this deal, they're getting 7% preferred return,
Okay.
and that's start from day one.
Oh, cool.
And there's enough cash flow for that, and we're looking at year over year about 17% when the deal is, when we exit the deal or when we refinance it in 7 years.
That's awesome.
Yeah, so it's about 17.5% is what we're estimating at this point. With the 4% growth is what we're putting in there, mainly
Right.
because the way this unit is, we have comps in the same building where one unit is renting for 1,400 versus another similar unit is renting for say 1,200
Okay. So you got
or
room.
1150. So we have the room to grow right
Yes.
there. The comps are right there in the same building.
That's awesome.
We were able to get 10% from the get go, just bringing everything up to market. And actually, the market rent is even higher than that.
Oh,
So
wow.
we have,
So you
yeah,
have
we have,
yeah. You have
yeah,
good amount
yeah,
of
we have a
room.
good room to grow. Yeah,
Yeah.
yeah. It's a beautiful property. You'll not believe this. It's across from a really nice park. So
Uh-huh.
you cross the street and there is a trail,
Oh,
and then
nice.
there's a park, and that has tennis courts, basketball courts, huge green space. It's all available to my tenants, and I don't have to pay for it.
That is
I don't
nice.
have to.
Yeah.
I don't have to
And you don't have to
maintain it. I
maintain.
don't
That's
have
the key, right?
to-
Pool or park, yeah, you add those maintenance, right? So you don't have to maintain them.
Right. It's got a lot of character, beautiful, beautiful location. It's near a golf course. You can walk to the golf course. Um, So yeah, it's just they got a lot of character. Old building. That's the only downside. It's a very old building, but it's strong. It's sturdy. It's not going anywhere. It's been there forever. It's going to stay there for a while. So
That's
those
what
amenities
matters.
help. Yeah.
Okay, so I love Atlanta market. Can we talk about the market? Where do you think Atlanta
Sure.
is going? Right, I know it's been growing like crazy, but is it is it slowing down? Do you think it's gonna slow down in near future, or it's gonna keep growing like this?
So there are different parts of the market that's within Atlanta. So you've got the housing market that's slowing for sure. I felt it with my rehab, and I have agents that I talk to and people that I talk to. So towards the single family homes, I think it's definitely starting to show some weakness. I don't think it's a buyer's market by any means, but things are definitely slowing down. Apartment wise, it's very heated. There are a lot more
Yes.
buyers than, there's not enough property. So you get calls from brokers all the time wanting to list your property.
Right.
There's just not enough inventory of for multifamily properties. But the rents are still rising. In your C class, B class properties. A class is struggling. There's just
Right.
so much new construction in the
Yeah. A
midtown
class
areas.
is different. Yep. Yeah, and Midtown's
Yeah,
growing like crazy. Yeah.
yeah, they've done a lot of construction. So
Yeah.
so a lot of areas like in Dunwoody, they've actually stopped issuing any more building permits for
Oh,
apartments,
really?
and
Okay.
yeah, Douglas County is also doing that. There's a lot of areas that are putting a little bit of a stop on or a little bit of brakes on new construction. So um, so I think that's going to affect some rental growth. I think it's a good thing for
Yes.
properties that are already there. It's existing. So you're going to have a little bit of a rent growth there because of whatever the inventory is there at this point for a little while.
Got it.
But overall, I think economy-wise, I think Atlanta is doing really well, and I think it's going to continue to do well. There are so many different parts, not just Atlanta, but overall as in Georgia. You got the
Right.
port down in Savannah that's growing, and then you got so many things going
Oh,
on.
yeah.
The film industry. Film industry is becoming such a big driving force over the last several years.
It's funny that you
Um,
mentioned that. I love Hollywood industry, right? And when I was in Atlanta, I did not know that. And then someone walked me around. Someone took me out there, one of the broker, and I was like, "Wow, I did not know that film industry is growing like this." I always thought it's New York and LA,
yeah,
but Atlanta is
no, I mean,
becoming a huge hub.
Atlanta it is a huge hub. I mean, Marvel does so many movies here, right?
Yeah.
You got and you got the IT sector is also
Yes.
booming,
Yep. I agree. So
and
that
Atlanta had the largest growth in population last year since the recession. So Atlanta is you know uh, is doing really well from population growth wise. And Georgia as a whole, I mean, we're at full employment at this point as of 2018. So, that's going to raise the wages, and, that all in turns means higher rents.
right.
um, so, yeah, I think we might see some softness here and there, but, overall, I think long term, I'm pretty bullish on that kind of market.
Yeah, when you are not trying to flip and you are trying to stay long term, 7 to 10 years horizon, I think you'll be fine in any
Right.
market, right? When people
Exactly.
want fast money, fast cash, and they try to flip or they want to get in, get out in a year or two, they could be in trouble in any market,
Yeah,
right?
if you're in the flip, if you're in the flip model, right, of the real estate, I would definitely put the flags up and say, okay, you need to be careful.
Right.
But in the rental multifamily part, and again, there are pockets, within
Yeah.
Atlanta that,
Yeah.
I shy away from. That's just like anywhere else.
Yeah. That's everywhere.
Um, right. So, I mean, you still have to be, pick and choose and do your due diligence, especially when the market is so heated. You don't want to overpay. So that does make, come in the picture. But, if you're careful on where you're buying, how much you're paying, I think, there's still deals to be had here in Atlanta area.
So we are almost wrapping up, actually. I just checked the time. Just the
Okay.
last question. I heard you are looking at a couple of deals. Do you want to share? Just give us an idea on what kind of deals.
Sure. Yeah, absolutely. I won't go into any, too specifics, but, we are looking at a deal. It's a smaller deal, 36 units, deal that, I think it's got some management, issues, also has some, property issues that are, that all of that creates an opportunity, keeps the competition away where I can get in. It has an on-site property manager, takes up one unit out of the
Uh,
36. So, that's an easy fix. You
and
don't
then
need a
there is
property
payroll
manager
for the
for.
property manager too, right? Payroll.
Yeah, there's a payroll. There's a one space that, one unit,
Right.
two-bedroom unit is rented. So, that's an easy fix. You bring that online, and then, there's some plumbing issues that I think some of the units going to need. They got the polybutylene piping
Oh,
that are in the slab. You got some,
oh,
when
it's
you
in
do
the
a new
slab.
plumbing. Yeah, so you're going to have to do some new plumbing in some of the units. But if you account for that and be prepared for it, that kind of stuff scares people off,
Right.
you know. So, especially if you don't have experience doing, dealing with issues like that, then, so that's good for, people like me that, I know it. The good thing is I know going into it
Mm-hmm.
that I'm going to have to do that work. How I choose to do it, if that I can just kind of dictate it as the time comes. But if I calculate that, already in my performa, then I'm covered. And also I can manage it. It's in my area. I can definitely make changes to the management. There's high vacancy there where it should not be. It's almost a 10% vacancy there. Even,
Oh, wow. Okay.
so out of the 35, once you take out the leasing office, that 35 active units, and then two, you have 10% vacancy. It's too high for that
Right.
area. Yeah. So something's not right. So, definitely something that we can take over from the management side and make a difference. The property is beautiful. The location
That's
is
awesome.
good. It's a newer property. It's got vinyl siding,
Oh,
new
cool.
roofs, low maintenance, and it's relatively flat, which doesn't happen that often in here. It sits well. It looks well. So yeah, I mean that's we're still negotiating, but it looks very promising.
That's awesome. Yeah, and I'm looking into the same deal as well. So I'm looking forward to partnering with you, hopefully, if that deal goes through. So I would
Yeah,
definitely,
absolutely,
keep my listeners updated as well on this deal.
absolutely. Yep, absolutely.
Hey, thank you so much, Darsh, for being on the podcast. I sincerely appreciate it.
No, absolutely. Thanks for having me, Opesh.
Have a nice weekend.
All right, you too.